The rise of de-dollarization. The US dollar has long been the dominant currency in the global economy, serving as a medium of exchange, a store of value and a unit of account for international trade and finance. However, in recent years, the dollar's hegemony has been challenged by various factors, such as the rise of China and other emerging markets, the US-China trade war, the COVID-19 pandemic and the expansionary monetary policies of the Federal Reserve. These factors have contributed to a process of de-dollarization, which refers to the substitution of the US dollar with other currencies or assets in different domains. De-dollarization can take place at different levels. At the level of central banks, which can diversify their foreign exchange reserves away from the dollar. At the level of governments and corporations, which can issue debt or conduct trade in other currencies. And at the level of individuals and businesses, which can use alternative payment systems or digital currencies. De-dollarization can have significant implications for the global financial system, affecting interest rates, exchange rates, inflation, capital flows and financial stability. According to a recent report by Bloomberg, de-dollarization is happening at a stunning pace, as the dollar's share of global currency reserves has fallen to its lowest level since 1995. Adjusting for exchange rate movements, the dollar has lost about 11% of its market share since 2016 and double that amount since 2008. The main beneficiaries of this trend have been the euro, the yen and the renminbi, which have gained market share as reserve currencies. The report also cites other indicators of de-dollarization, such as the decline in dollar-denominated debt issuance by emerging markets and the increase in cross-border payments in non-dollar currencies. The reasons behind de-dollarization are complex and multifaceted, but some of the main drivers are the rise of China and its efforts to internationalize its currency and challenge the US-led global order. China has been promoting the use of the renminbi in trade and investment with its partners, especially in Asia and Africa. China has also launched initiatives such as the Belt and Road Initiative, BRI, and the Asian Infrastructure Investment Bank, AIIB, to expand its economic influence and provide alternatives to US-dominated institutions. Moreover, China has been developing its own digital currency, which could potentially facilitate cross-border transactions and reduce its reliance on the dollar-based SWIFT system. The US-China trade war and the geopolitical tensions between the two superpowers. The trade war has exposed the vulnerabilities of relying on the dollar as a medium of exchange and a weapon of sanctions. Many countries have sought to reduce their exposure to the dollar and diversify their trade partners to avoid being caught in the crossfire. Some countries have also sought to establish bilateral or regional arrangements to bypass the dollar, such as swap lines, currency unions or local currency settlements. The COVID-19 pandemic and its impact on the global economy. The pandemic has triggered a massive fiscal and monetary response from governments and central banks around the world, leading to unprecedented levels of debt and money creation. The US has been particularly aggressive in its stimulus measures, expanding its budget deficit and its balance sheet to unprecedented levels. This has raised concerns about the sustainability of US public finances and the potential inflationary consequences of its policies. Some investors have sought to hedge against these risks by diversifying their portfolios away from dollar-denominated assets. The expansionary monetary policies of the Federal Reserve and its implications for interest rates and exchange rates. The Fed has cut its policy rate to near zero and launched several quantitative easing programs to support the economy and provide liquidity to financial markets. These policies have reduced the attractiveness of holding dollar-denominated assets, as they have lowered their yields and weakened their value relative to other currencies. Moreover, these policies have increased the supply of dollars in global markets, creating excess liquidity that could fuel asset bubbles or currency crises. De-dollarization is not a new phenomenon, nor is it a linear or irreversible process. The US dollar still enjoys many advantages that make it hard to replace, such as its liquidity, depth, stability, and network effects. However, de-dollarization is a significant trend that reflects a changing global landscape and poses challenges and opportunities for policymakers, investors and businesses alike.